Welcome back to Bazaar Morning Call. Plenty of stocks to talk about. So very quickly, let's get our entire research team to tell you about that list. Some of the PSUs reported good numbers this time. Coal India was one of them. Good set of earnings.
Well, very good set of earnings for Coal India. And the good news is that, in fact, yesterday the stock was under pressure. So there's no preempting the good results. Top line was a beat. Margins as well much better. The key reason was that you had the blended realizations that came in a little bit better. FSA prices, well, they went up because they had taken a price revision in last year in May 2023. So that's what reflected. But the better news was that the e-auction premium to FSA, that spiked up on a quarter-to-quarter basis. So in the previous quarter, it had gone down to around 85% odd. So that came in as a bit of a pleasant surprise, and that's what led to the beat. You had cost as well that are under control. The stripping activity cost, well, that came in lower, but that's a non-cash expenditure. The profit number was higher, supported by other income. Stock trades at single digit, 8 times PE, and has a dividend yield of around 6%. Expect the stock to bounce back in today's trading session.
Okay, that's on Coal India, but what about Hindalco?
Well, Hindalco's numbers actually, Sonia, were pretty okay. That's the Novelis' numbers. So the adjusted EBITDA per ton at close to around $500 per ton. They're also talking about going to $525 per ton for Novelis' operations in Q4, and they're saying gradually they can scale it up to around $600 per ton. So all that's fine. The problem is that the net debt number has moved up because they have a big capex plan underway. And the biggest problem about these numbers is that they've gone ahead and increased their capex for one of their plants. They are in, currently they are setting up a 600,000 ton plant out there. Earlier, they had guided that the capex out there would be around $2.5 billion odd. Now they're talking about $4.1 billion, which is a capex increase of close to around 60% for a single plant. And they've also said that the project now will start in the second half of calendar year 2026. So that's a little bit delayed as well. So this big capex spikes is something that will spook the stock. So expect the stock to open up in the red.
Okay, and one stock that had a big fall yesterday was Bharat Forge. So I'm watching out for that one. A lot of brokerages have come out and cut their earnings estimate and target price on the stock post the numbers in the weak commentary from the management yesterday. Citi has a sell. They've cut the target price to 800 rupees from 900 earlier. CLSA has a sell with a target price of 977. Jefferies has an underperform with a target price of 950. Remember yesterday in closing bell, the company told CNBC-TV18 that Europe is seeing heavy cost increases because of geopolitical events in its vicinity, and many export markets are seeing both a moderation in growth as well as a slowdown. Now, yesterday there was large delivery selling that took place in Bharat Forge, about 238 crores of delivery selling in one day, which is 5 times its 1 month average. The F&O turnover was also the second highest amongst all the stocks, and there were fresh shorts seen in the system. The open interest change came in at over 12%. So I'm going with red. You could see some incremental pressure on Bharat Forge this morning. But sale is what you're looking at as well?
I'm going with red out there, Sonia, because those numbers at the face of it appeared pretty much in line, the EBITDA number. But the problem was that the top line was a little bit low and the volume decline was to the tune of closer around 8% odd. So the EBITDA number and the operational performance looked okay. But there was one provision that they made out there. The top line could include the provision on account of a rail price revision. A couple of sales notes have mentioned that that's the reason why the numbers are in line. X of that, it would have been lower. Well, a couple of other brokerages have written that, in fact, this is not included in these numbers itself. So we'll have to wait for clarity on that front. Though the gross margins did come in higher, which, was the reason that EBITDA number got some backed up. But the reason I'm going with red is adjusted numbers don't look very, very good. The sales volumes numbers were lower, which means they have some inventory built up in their system. And the gross debt number as well did move up. So expecting it to open up in the red.
Absolutely. And I think SAIL is also now been included in the MSCI small cap index.
Oh, that'll be good for them.
That'll be good for them. So some buying support perhaps at lower levels. Perhaps also at play. But Nigel,
and also the other one is that yesterday you had already had the stock corrected from 150 to 122.
Yeah, absolutely.
So if there is some bad news, some part of that is already in the press.
Absolutely. But it's a long list of stocks for you, Nigel. It's almost a slam dunk on HEG.
Extremely busy morning, but HEG's numbers actually were disappointing. The longer term story is very, very good because there's going to be more of EAF, electric arc furnaces that will be set up globally. So graphite electrodes will be needed, but these numbers still, they're not very, very impressive. Top line, a small growth out there. Operating profit was down by close to around 35%. Margins, well, they came in at the lowest we've seen since March 2021. They've come in at around 15.5%. The management has said we're close to bottoming out, but maybe not as yet. Maybe from Q4 onwards, we'll see that. So going with red on this one, though yesterday the stock was down close to around 7%.
All right, that is on HEG, but Galaxy Surfactants is the other one that came out with their earnings. Sonal is here To give us the lowdown, Sonal, over to you.
Good morning, Sonia. It was a weak set. The revenues declined 13%. The EBITDA was down 25%. The margins also came in lower by around 200 basis points, leading to a profit decline of 33%. In this quarter, EBITDA was also aided by a 20 crore rupee export incentive in Egypt, which was booked in the quarter. The underlying volume growth, however, was at 8.4% in 9 months, which is higher than the guided band of 6 to 8%. But EBITDA per ton was lower than the guided band of around 19,500 to 20,500 rupees per ton. So it came at around 18,800 rupees per ton. However, they did say that the Red Sea escalation did dampen sentiments in the second half of December, and this is the biggest risk going forward. So more light on that is something we'll read. But yes, overall, weak numbers.
Okay, overall weak numbers from Galaxy Surfactants. Well, let's hop across to Vivek. He's tracking Dilip Bilkon this morning. Vivek, over to you.
Well, good morning. It's a steady set from Dilip Bilkon this particular quarter. Debt reduction has also come in. This was on back of the deal that the company announced with Alpha Alternatives in Q2, and thereby debt has reduced. Now, looking at the numbers themselves, quite a steady set. Revenues higher by 24% on a year-on-year basis, coming in over the 2,870 crore mark. EBITDA aided by lower raw material costs, aided by lower other expenses, but marginally impacted by higher other expenses was something that actually aided the EBITDA growth, higher doubling on a year-on-year basis. Margins too very strong, 12.4% versus 6.8%. Profitability, however, was down 3.2%. Total order book this particular quarter has marginally moderated compared to Q2. Total order book coming in at over 21,840 crore. Order inflows for the 9 months of FY24, well over 2,140 crore. Expect the stock to open in the green today.
Okay, all right. Thanks a lot for that, Vivek. Going back to Sonal. Sonal, tell us about Phoenix Mills.
The P&L looked really good for the company. In terms of revenues, it was a growth of 44%. EBITDA grew 44%. Their margins were flat at 56%, but the profits grew by around 70-odd%. Their free cash flows have also come in at an 8-quarter high at 536 crore rupees. In terms of their operational update, their retail consumption was up 25%, which is with the new malls. But on a like-to-like basis, it was up just 5%. In fact, their biggest mall, which is Phoenix Palladium, saw 2% decline in consumption, quite telling about the demand trends going forward. But yes, the P&L was good and free cash flows also coming in at higher levels.
All right. Sonal, thanks very much for that. More numbers, Time Techno Plus and All Cargo Logistics. Upasana's got more. Upasana.
So first up, let's talk about Time Techno. The company reported a strong Q3 with a volume growth of almost 20% on YoY basis. Revenue also saw an uptick of almost 17% on YoY basis, and margins also sharply expanded by 100 basis points at 14.5%. In terms of PAT, the growth we saw an uptick of almost 50% and stood at around 92 crores. Next up is All Cargo Logistics. The company reported a weak Q3. That's why we are going with a red on this stock. The revenue saw a downtick of almost 22%, and EBITDA margins were also under pressure, stood at 3.5% versus 6.1%. But the company says that the international supply chain business has bottomed out and performance nearly remains flat sequentially. The performance was mainly impacted by significant losses, mainly in US and Germany. And in terms of volume growth also, it remains quite flat on YoY basis, and there has been a marginal decline of 1% on FCL volumes. So all in all, we are seeing a weak set coming from All Cargo.
All right, thanks a lot for that. So long list of stocks in trade this morning. Here's a quick recap in case you missed out on any of them. Stocks with positive news flow, there's Coal India, Dilip Bilkon, Phoenix Mills and Time Techno Plus, while stocks with negative news flow, there's Hindalco, Bharat Forge, SAIL, HEG, Galaxy Surfactants and All Cargo Logistics. Let's take a quick break. On the other side, Amnish Agarwal of Prabhudas Leeladhar will be joining in for some fundamental stock analysis. Later, we'll connect with Unnathan Shekhar of Galaxy Surfactants to talk about their Q3 performance. Stay tuned.